The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing today? I'm your host, Darrell Martin. This is a Diagnostic Trading Hour. And make sure if you want to ever listen in while you're on the go, you can listen in at TFNN.mobi. And as we do each and every day, go ahead and do the market wrap for you on where the market's standing at right now. We got the S&P down 6 points. We have the NASDAQ down 7.25. And we got the Russell down 9.5 with the Dow down 39 points. And looking over at our metal sector there, we got copper basically flat on the day. So up just a tick there. And then looking over at silver, it's pretty flat right now compared to the close of yesterday. It's just up 0.052. And gold also pretty flat, up 60 cents right there on the day. Moving on down and checking out corn and soybeans. We're seeing that corn is just down a few points and soybean is down $6 on the day right now. And in the energy side of things, over on oil on the CL contract, it's down just a mere 32 cents, but natural gas again flying on down, and it's down 1.5% on the day. Euro dollar, checking out our currency pairs here. Euro dollar flat on the day, just down a pip. Pound dollar down 32. Aussie dollar just up 1 pip, so flat on the day. U.S. yen down 52. U.S. franc is literally so unchanged for the day right now and flat. And looking over at U.S. Canadian, it is up on the day, and it has been pushing some highs. And so also one of the things we like to do after we do that market wrap, make sure you know where the market's at right now, is go ahead and look over at the fundamentals. And on the fundamental side of things, we go over and see what came out tonight, what came out this morning, and is anything having a big impact? Well, over in New Zealand, we had, let's see here if I can pull this up for you. We did have a report last night, came out at 7 o'clock, and, get that backwards there. And it had a bit of an impact. Came out at 7 o'clock last night again, so and that would be at 1900 there. And you saw that did cause a bit of a spike, and that report was the New Zealand Business Confidence Report, and gave some strength to the New Zealand dollar there, and put a little weakness on the U.S. dollar as it has descended, or actually continued its climb all the way through into the morning. That was about the only report we had last night. Now this morning, we've had a couple reports. There was a German confidence report and a couple other reports that came out. One of the reports that did come in that was a pretty big report was the Spanish unemployment rate. That came in at 25%, which is worse than it was last time. Last time it came in at 24.6%. But better than expectations. They thought it'd be 25.2. But no matter how you look at it, 25% is just way too high, period. And that is a new high for the Spanish employment rate since the recession here. So I don't know when or if they've ever seen that high of an unemployment rate, but that is definitely the highest rate since 2007. So 25%. And so that, of course, like I said, not only did that, it was a little bit better than expectations, but it was also a worse unemployment rate than the last report. And if we look at the same report this time last year, back in 2011, it looks like it came in at 21.5. So they've actually moved up about 3.5% on their unemployment since last year. So moving on over and checking everything else out. On the U.S. side of things, we had our GDP number come in this morning, and that came in at 730. And it came in a little bit better than expected. So they thought it'd come in at 2. It came in at 2.8. Or actually, I guess that was the advanced GDP price index came in at 2.8. The advanced GDP quarter over quarter came in at 2 compared to the 1.9 expectation. And that sort of, there's a little bit of a rally into that. And as that came out, that did push the market on up. But it was not enough. And I thought we might have a gap fill again today, but we didn't have, basically there wasn't really a gap today. It was so close to where it closed yesterday. But that was pretty much it, and then the market just moved on down. And then the University of Michigan Consumer Sentiment Report came out. It came out at 82.6 with an expectation at 82.7. And that was released at 8:55 Central. So if I go over here and check that out, you can see they were not real happy with the expectation there. I'll break it down into 5 minutes so we can actually see where that report came in and what happened there. So 8:55, that report came out. Market started moving on down as soon as that report came out. And it's an index where they survey consumers. And University of Michigan goes in and surveys 500 consumers, and they ask them, questions about the current and future economic conditions, their opinion, and, things like that. And if you want to see that latest report, you can get it on Reuters there. So go ahead and post that link over in the Tiger's Den. That's Thomson Reuters. And they have the entire survey report and what came out and, what all the details are on it. But, basically it's just, it's a little higher number, and it's a little bit, interesting how that came out. When that comes in better than forecasted, that's actually usually strengthens the currency. And it did come in, but it didn't really come in better or worse. I mean, it's 0.1 off. It is one of the highest readings we've had in quite a while. And let's see, I'm trying to even find the last time we had a reading as high as that. And it looks like I have to go all the way back to September of 2007 to find the last time we had a reading as high as 82.6. And they just go in and they look at them and, basically what do they think about it. So that's sort of interesting, getting such a high reading on that report in the middle of everything that's going on. It's almost a bearish indicator in and of itself. That's just too high of a number. There's a lot of things that you can look at, you can read into it. But at the end of the day, it was just basically people's money is in the wrong place at the wrong time is what it is. And so, you can see that report and the effect that's had on the market. And as soon as that report came out, market just moved on down. So it may be able to pull that back off and come back up and, have sort of a flat day before it's all over with. We'll see how it goes. And one of the announcements we wanted to make and let you know about is that we have actually now launched the diagnostic section of TFNN. And so you can hop on over now to TFNN.com and get access to it. And it's right there on the homepage. You'll see Diagnostic Trading. And so you can get access now to the box spread analyzer. You can also get access to the diagnostic deviation levels with it. So you just click on that, and again, it's right here on the left side. You'll also see it right here, obviously the big diagnostic logo right on the front. And you click on that, you can get a 2-week free trial, check it out, and see what you think about it. And again, there's no risk to a 2-week free trial. And hop on there and check that out and get access right away. And you'll be able to get access. I actually post the deviation levels every evening, so you'll have them for the next day. And when you log in, what you'll see is you'll come in here, and you'll go in and it'll talk about basically, how to get started. So there's a whole section on tutorials and how to use Nadex and everything else. And also we go into, by the way, the deviation levels are not just for Nadex. They're for futures, they're for Forex, so you can use them on all those markets. And right now we're tracking all the Nadex markets. We're going to be expanding it out, but right now we track all of the Nadex markets. And you can go in there, and as long as they're traded in U.S. dollars, so into the USD currency pairs, like U.S. franc, U.S. Canadian, U.S. yen, euro dollar, pound dollar, Aussie dollar, all the U.S. indices. And then as well as you can go in and you can track them and use them on other things like gold, copper, silver, corn, soybeans, natural gas, oil. So they work on all the different markets. And you can use the scanner while you're going through the tutorial. So once you watch the tutorials, make sure you're using the scanners you're going through. It'll help you pick up Nadex really quick if you're wanting to trade over on Nadex. And step one, go ahead and make sure you do grab your Nadex account. And you can go right here and click on Nadex. And you can get a 2-week free trial on Nadex. They put $25,000 of funding money in your account. Just click on demo account there at the bottom, or up at the top where it says our products. You'll see demo account. Click on that. You can fill it in. And make sure you have access to that demo account while you're in your demo over here on the diagnostic trading section of the website. And get a live account. You can get your demo extended. Just email me. Let me know, and I'll let you know how to get that extended. But once you fund a live account, it's only $100 to fund a live account. You can go in. You can put in your username and password and get signed up. But if you need to get signed up, click Create Account. And then it's only about 5 minutes from start to funded where you can start trading over on Nadex. And then once you're in there, then I also go into the deviation levels. So you want to use them on futures, you want to use them on Forex, you want to use them on Nadex, and they'll help you with each section. I go in here, and there's a whole tutorial and everything built on it, and shows you exactly how they work. And like I said, they're updated each evening. And you can hop in there and you can actually see the deviation levels for the day. And I talk about them right here, as well as, like I said, there's a whole tutorial built on just that. And if you go over there, there they are. So deviation levels for the day. And these are powerful, and I guess you could say indicator, price level, whatever you want to call it. But it really is the statistics part of trading. And without you having to do any math, you get the hard number right in front of you. And it's how far the market expects the market to move today. And the way that we actually build this is we extract the implied volatility from 4 options over 4 months for each underlying market. And then we average that implied volatility, we put that together, and then we factor it into a deviation formula. So that way you have areas where you can go in and, let's say at 0.5, you can be tightening stops, 0.7, tighten them again, 1, tighten them again, 1.5, tighten them again, and basically let you know how far you should expect the market to move. And one of the hardest things as a trader is, okay, you're going to be really good, you're going to set stops, or you're going to use Nadex, and Nadex becomes your stops. But then you have to know, okay, well, where should I expect to take profit? And without having to do any analysis, you have the levels right here. It builds it all in. It makes it really simple, and they're incredibly accurate. And so we'll go through some of those levels for you and look at each one of the markets, so that way you can understand that. And not only do you get the deviation levels, but you also get access to the scanner. So, and what this does, this actually goes in and it scans all of every single one of the Nadex markets for you. So that way you can go in and you can literally find your best trades in seconds and find out, what's going to be the best trade for you on a buy side, on a sell side, and, the lowest risk, highest reward ratio, and time to expiration. Everything is built into it. So on the scanner, just to show you a quick review, if you weren't on the Bull Bear Binary Hour this morning, want to make sure you do understand how to use it, how I use it, and you can, like I said, just use it to make it really easy to find trades. So let's say you want to trade the S&P 500. You can go in and say, I don't want to risk more than $100 on a trade. And it'll instantly remove all trades that have more than $100 risk. And then you could say, I want to have the ability to make at least $2 for every $1 at risk. And then it'll take all those trades out. And now you have the buy and sell trades that are currently available for trading over on Nadex. And you may go, I want to buy or I want to sell. So it's depending upon, which way you want to go, what you want to do, and how much risk you want to take. So let's say for whatever reason you want to buy on the S&P 500. You click on the buy side, and then now you have those. And then you notice right here there's one with 41 minutes till expiration, and then there's one over here with 176 minutes to expiration. You may decide you want to the end of the day. You don't just want to have 41 minutes. You want to have till 4:15 Eastern time there. And so you can say, don't show me anything with less than 60 minutes on it. And by doing that, it'll reduce it down further. And now you have basically the 2 different spreads that you could choose from. And you can leave these settings in here, by the way. They actually are saved. So even if you leave and come back and log in, the settings are right there. So you don't have to do that each time. It's a quick, easy way to do it. So now within a couple seconds, you instantly are able to analyze all the spreads over on the Nadex platform. And if you've been inside the Nadex platform, there is a lot of different trading opportunities, which is great, but also can be challenging because you go in, you do all your analysis, you pick your trade, and then now you got to figure out which trade are you going to do. And which spread are you going to use to place your trade. So over here in the Nadex platform, you'd be going in and you'd be going, okay, I want to trade the US 500, and I want to go in and I want to look at this one and this one. And so you got 3, 6, 9, 12, and then there's one right there, 15. So 15 different spreads you have to analyze versus having all of them up on the screen for you in a matter of seconds. So stay right there, folks. We'll be right back after the break, and I'll go into more detail on how to use the scanner to help you out on Nadex.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right. Thank you for staying right there, folks. We're on back here with the Diagnostic Trading Hour. So I want to show you how to use the box spread scanner. So if you're going in and let's say you're doing a buy on the US 500, instead of having to go into and look at all these different ones out there where you're having to like search through 15 different spreads, you can hop in and you can, like I said, just trade directly, and it makes it really, really quick, really easy. You don't have to search through 15 spreads and do all the calculations on the spreads, which can, honestly, the trade can be over by the time you figure it out. Whereas with this, if I'm like, okay, I got a bullish setup coming in, and I'm bullish on the market, and then you already have your settings up here, so all you have to do is go, wow, what are my choices? Okay, I have 3 choices. Now instead of having 15 or 13 choices, and if you look at the buy and sell side, you actually have 26 choices. There's only 3 on here. It's narrowed it down for you. And you can look at what's available. Well, this one's way out of the money, has to move 9 points to expiration, so you're probably not even interested in that. So now you have these 2 different spreads that you're looking at right now, and this one's risking $32. This one's only risking $27, so it's pretty close. There's only a few dollar difference in the risk. But look, I have 94 minutes versus 169 minutes, so I have a lot more time and only a few dollars more risk, and only a couple more, really not even a full tick between getting in and break even between the two. And then I can look over here at the risk reward, and for every dollar at risk, I have a potential to make $2. Over here, I have potential to make $8. So this is the obvious choice, and I can go up here, and there's a plugin built in. You can choose demo or live. So if I chose demo, I can click on that, I can click save, and I also can choose my quantity that I want to use, and I just click on the buy button. And once I click on buy, it'll instantly open the ticket for me over in the Nadex platform. It'll fill in the price and the quantity that I had and the live price on there. and then I'm able to actually go in now and place my order immediately inside the platform. So, and let me see right here. Pull this up. And sorry about that. There we go. And we got several things going on at once on the screen there. And I think I did the Windows shake. There we go. Pull the right button back up. And anyway, so you got that, and you can check that out. And let's see here. So there's the ticket, and that's what your ticket's going to look like. And the ticket's pretty cool because what it does is it actually calculates the profit and loss for you. And you could have used anything you wanted to on the ticket. You could have used the scanner. You could do it by hand. But when you open the ticket, it does verify what your max profit and loss is on the trade. And so that way you have the ability to go in and use that to your advantage to go, okay, just to verify your risk. So my risk on this trade is $31. And that's the only risk I have on the trade. And, it's a great way to trade. They trade the S&P. So now, one thing that some traders like to do is they like to actually equalize the trades. And so if you go over here, and if you're looking at the box spread scanner, let me open that back up so you can see that again. And you're trying to figure out, I want how many US 500 spreads do I need to equal for a one-tick move in the spread to equal a one-tick move in the S&P 500? Well, the S&P 500 is worth $50 a point. Okay? So since you know that the S&P 500 is worth $50 a point, then you know that a spread is worth $10 a point. Well, how do you know that? Well, it's pretty simple in the spreads. All right? If you're ready for this is how hard it is. Every tick, so every minimum move, okay, like a cent is a tick on a stock, all right, is worth $1 on Nadex. And you just look at how does it move. Well, you can see just by the quote how it says 1400.0 to 1430.0. It moves in 0.1. So 0.1, 0.2, 0.3. So if you know that 0.1 to 0.2 is $1, 0.2 to 0.3 is $1, then a move from 1400 to 1401 would be $10. Does that make sense? So 1400 to 1401 would be worth $10 because there's 10 ticks in there. Well, on the S&P, a move from 1400 to 1401 would be worth $50. Well, if you put those two together, if it takes one tick or 1 point move in S&P to equal 50, and a 1 point move on the US 500 equals 10, then you know that it takes 5 US 500 spreads to do that. Well, maybe you don't want to do all that math, okay? So what you can do is you can go over here and you just put a highlight right over this column right here, and it'll actually say basically 1 ES to 5 spreads. So it tells you what the ratio is immediately and makes it really easy for you. And it'll do it for every one of them. So if I go over and I look at, say, the small caps, then it'll do the same thing for me. It'll show me that there's 1 TF to 10 spreads, okay? And so it's really, really helpful when you're trying to figure out, okay, I want to use this in place of the futures. And, Nadex can be as easy or as hard as you want it to be. And the nice thing about the scanner is it makes it really easy. I think it's the best way to trade. I don't think there's any better way to trade than trading on Nadex. But what you can do is you still have to figure out what the right spread is. And, it's not that hard. This is what it can make if it goes up, if it goes down. So you can use all of that, like I said, to your advantage, and it'll help you out a lot in your trading. If you have any questions about all this, one of the great things is you can go in and let's say you have questions about trading. I actually have a help desk built in, and I'll show you exactly how that works. So you can ask me all the questions you want with your diagnostic trading access. Stay right there, folks. We'll be right back after this commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on here back to the Diagnostic Trading Hour. And if you have any questions, feel free to give me a call right here at TFNN. You can find the number right there on the homepage, and you can call in on any one of our shows, and we'd be glad to answer any questions that you do have. And again, the number is right there on the homepage at TFNN.com. The number is 877-927-6648. Again, that's 877-927-6648. All right, so the market looks like it's decided to push on back up a little bit at the moment. And so like I said, there's a lot of different ways you can trade this market. You could be buying, you could be selling. And a minute ago, we were looking at a spread, looking at going long on that spread. And if we would have hopped in there and already been up a decent little profit on that one. But again, the big thing I want you to notice is the low risk. So you can go in, and this trade was, I think, $50 risk before, $30 risk actually, depending on what time you hopped in on it. And so now it's at $63 risk because you're hopping a little bit higher. And you can go in, though, and you can find the spread that's going to work best for you. And you have a lot of profit potential built in. You easily open up the ticket. So the whole point of the scanner is just to make it fast. So once you've made your trading decision, it filters down all the possibilities and lets you find the best spread for not only how long until it expires, how far it has to move, how much is at risk, and what's the potential profit. And one thing I always tell traders is make sure you don't just look at this is max reward. Don't just look at the max reward on the trade, okay? You want to look at how far you expect the market to move. And that's where the deviation levels come in. And they can also be really helpful not only on picking your spreads, but just on trading in general, letting you know where to take stops, where to look at potential reversals, and things like that. And so things I do on the show every day is I like to go through and look at just the deviation levels and show how they would have impacted your trading. And the deviation levels, again, that comes inside of the diagnostic trading section there. And again, you can get access. You just hop on TFNN.com, and you can get access to the deviation levels when you subscribe there to the Box Spread Analyzer, 14-day free trial. But let's go ahead and look at the deviation levels, how they stacked up today. Okay? Well, one of the things you can do, and there's a lot of ways, we'll go through and we'll get some of the price levels, is look at this. What is one diagnostic deviation? Well, it's 16 points. And so looking at one diagnostic deviation being 16 points, you could actually look at the overnight and see we had this big run up in the morning. You can look at, what was the move on the run up? And is it maybe due for a reversal? So if we go and we add 1394.5, we'll go and add 16 to that for the deviation amount. We said it's 1410.5, meaning it stretched itself an entire deviation from the low of overnight to the current high. And so right up here, when it got up to 1410.5, you think there's a potential reversal in play. And so you may actually be ready to go short on the trade. So that's one of the possibilities, one of the ways that you can use it. So one of the main way to use it is just to literally pull out where you think the market's going to go. So let's say you went short up here and you were trying to figure out where to take profits at. Then you go in and you look at each deviation level. So where are you going to tighten your stops? So that's one of the hardest things as a trader, is knowing where to accurately tighten your stops. And where's those consolidation, what's consolidation versus what's reversal, and you're always battling that as a trader. So the first consolidation zone, or say deviation level, at 1400.75. So if we go down here, we look at 1400.75, then we can see that right about there, okay? So just, tick or so off there. But 1400.75, and you see the market came down to that zone, all right, stopped, came back up, and then pushed down against it again, and then came back up. So it really used that as a major support level in the market. And it actually said that if it goes further than that, okay, the expectation is 1397.5, and we can see that it actually came to 1397.5, and it stopped right there and started moving on back up. And so now we're looking for a move back up really to yesterday's close, okay, back up to 1408.75, and we can take the deviation levels another level on up, and we can go, okay, well, let's say it does actually break that with some volume, with some strength. Where do we think it might move on up to? Now that's where the half deviation comes in. So our expectation would be up here around 1416.75. And, what's really cool, one of the things I love about Nadex is, let's say you got in on the market right on the open. You got in, you bought. But then the market went way against you. Okay? Well, you have time to be right on the box spreads because you can't lose more than your trade, and you're in it until expiration. So if you bought that spread, like, right here up on the open, and the market's pulling back against you, you're not freaking out. Your risk isn't increasing on the trade. And it moves on back up, and now all of a sudden you're like, wow, sweet. Whereas any other trader, you probably would have been stopped out because you're like, man, this thing may keep going. It keeps pushing really hard. And, I'm sort of nervous about getting stopped out on this trade. You wouldn't be nervous about getting stopped out. So it takes all that emotion out of your trading. So that's our deviation levels right there for what we expect on the S&P. Let's check it out on the Russell. And it's pretty cool. I actually broke this down. We were looking at this morning, just on the Russell 2000. And if I go in and I look at the Russell and I go, okay, well, what was the expected move down? Well, the first expectation was down to 810.5. So if you're trading, then that means that's where you'd want to be. If you're short, you want to be tightening your stops at 810.5. And, we zoom in on that level right there. Let's see here. Turn off that and give me my little pointer back. There we go. And you'll notice that it really did use this as a support, and then finally it broke through it, and then now it became resistance, and then moved down, and it moved down to 804. Well, what was the level that we thought it would drop after it hit that 810.5? So we can go in, we can add that level back on. So that level went on down. We expected to move down to 808.5. Okay, so that was the next expected move for it to go down to, and we got 808.5. And again, we're tightening stops when it actually does hit these levels, but this is our next target zone. We can see that became a support resistance right between those two levels right there. And then if we go a little bit further, it says, okay, well, what is a one deviation move? It says 805.5 is really what we should expect as far as it to go down today. So we put that in there, and that's a full deviation. So that's really the most you expect the market to move. It may, go a couple ticks past it, but you don't expect it just to fly past that level. And if it goes on down there, then all of a sudden we got support and resistance. and then it bounces back up to, right now we're at the 0.7, and it's making its target back towards that half. And if it kept going, then we'd expect it to go back up really to yesterday's close at this point. So 815.7, if the market decided it was going to make a full run on back up. But you can just see how if you're on here and you're trading, let's say, whatever bar size you like to use or bar type you like to use, but if you're trading, how helpful this really could be for helping you have target profits, okay, and setting stops. So it comes down, it hits that, you tighten your stop, maybe like 2 bars back is a pretty common strategy. So you tighten your stops, boom, you tighten it again, and you keep tightening it over here, and then it goes here, then you tighten it again here, and it falls down, it hits another level. And, so you may have got out right here, and then, you have another what I call apex entry right there. We could have went short again, and then that's your next target zone. So you know what you're shooting for each time, and it's amazingly accurate on how it helps you on tightening your stops and knowing where to select your strikes. So if you're choosing spreads, okay, how far do I expect it to move? Because remember, one of the things that we were checking out over here, it's on the scanners, how far does it have to move to be break even? Okay, so if you're looking at how far it has to move to be break even, you need to go, well, do I think it's even going to move that far? This thing has to move 5 points to be a break even. This one only has to move 0.8. So, and then you can go use the deviation levels and go, well, what's the next expected move supposed to be? And so that gives you a great way. So you can go in and you can actually use this even. You may decide you want to go into the 2 hour, the shorter term spreads. And so I go here and hit 0. And so just for like short term moves and see if you find another move that maybe stacks up and will work out well for you. So let's check out a couple others. We'll look at, let's see here, U.S. Canadian. All right. So I'm just going to flip over. It's one of the pairs I was looking at earlier this morning. And sort of interesting if you back on up. And we're, at a major level right here, by the way. Check this out. We're at the level of, 1, okay, on par there with the dollar. And so that's obviously going to be a super strong resistance zone right there. And, like you can see right here where it just bounced on it, and finally broke through the U.S. Canadian dollar. So where the dollar got a lot stronger, or got a lot weaker against the Canadian dollar. And then it's got a lot of strength lately with the market volatility and everything that's been happening. But that's obviously going to be a strong resistance level. And we can go, okay, well, all right, well, that's just a very obvious zone because, round numbers are important numbers in trading. So just psychology makes them important. But then what do we have for, deviations if we break it down and look a little tighter? Okay. Well, if I look a little bit tighter right now, if I look at the U.S. Canadian dollar and I had my move, all right, so we had a yesterday here, and we'll zoom in a little bit more. There we go. And we had an expectation on the U.S. Canadian to move on up to first 0.9974. So if we go in and click on that right there, so you can see, and this was posted last night, so you had plenty of time, but that gave you your first target. So that actually could have given you a target zone for buying a binary strike or buying a U.S. spread, a NADEX spread in the evening. So maybe you're an evening trader, but you need to have some target zones so you can put your trade on and then set your take profit. And so you have that right there. And then once it breaks past that point, if it breaks past that point, you can tell how it kept falling off of it and going back to the close there of yesterday. But if it breaks past that point, what's the next expected move? So let's go to U.S. Canadian. Let's check out up to 0.7. We got 0.9983. So 0.9983, and right there was our next expected zone. And it did break that with a little strength. We can see how when it came back down, it chilled out at it for a long time on that level, and then it dropped right back to its half deviation, which is where it's sitting at right now. And then a full deviation on the U.S. Canadian would have brought us up to 0.9996. So we go 999, and then just a little higher, 6. So we're really talking 3 ticks away from a full deviation move. And one of the trades I put on earlier, literally right about here, I put on a trade to go actually short the U.S. Canadian on binary, and I sold a binary on it using the deviation levels. So I was able to sell the binary for a $25 risk, $75 profit if it closes below 9980. And I expected it to go ahead and move on back down after moving that full deviation level, and it is moving on down right now. And it's below that level, so if it stays below it, I'll make $75. If we're getting too close to expiration, I think, hey, I need to get out. I can go ahead and take a profit on the trade right now. But I'm going to let it move a little bit further and see how it goes. And so, but it's just really, and you can just see how good the target zones are for helping you on picking your price levels. Looking on over here at U.S. yen, we can check out that and see what are the expectations, because we had a massive move. mean, a huge move on the indies. Look at that. I mean, just perfect move on down there. And the expectation on the downside on the US yen was first to move to $80 and, let's see, 6 cents. So basically, this was our first expected stop. Okay? This is like, hey, this is where you should expect the market to move to. This is also where you're going to want to start, tightening your stop up a little bit. And if it moves further, where do you expect it to go from there? Well, the next move was an expectation for it to move, not that much further, but to move on down here, let's see, down to, it's about 79.85 would have been a half deviation, or the full move right there. So we got that one in. And you can see that actually became a perfect level, 79.85. Hit that, broke through, came back up, and then finally decided to break it. And then when it moved further down from there, we got to move down to 79.42 would be a 2 deviation move, which is really rare, okay? But we could put that, plot that chart on there. You're not going to see a 2 deviation move very often at all. And so one of the things that is I added in, I actually started adding this in to help out. I did it manually myself, but some feedback I got said, hey, let's add in those half deviations on the 1.5 deviation. And just so people know, okay, if it does break it, where do we expect it to go to? And so the 1.5 deviation level on the US yen is actually at 79.63. It's right about here. And so it came down and just sort of floated around this area before it decided to pull on back up. Didn't quite hit that 2 because, you don't expect it to hit a 2 deviation level, really, ever. Okay, I mean, it does do it. 3 is one of the rarest. It's like a 0.3% chance it'll even touch that level during the day. But anyway, so it hit that, pulled back up, but it gave you some great target zones for your trade. So even if you wanted to sell here, okay, where do I expect it to go to? And then this also can become reversal zones, like 1 or 1.5 deviations. You can use that for reversal zones. We can hop on over and look at some of the other things, like let's look at corn. And these levels, they do get updated every day. So the volatility changes every day. So corn market's now closed. Or not corn, but gold market is now closed. No, I was talking about corn. I'll bring that one up next. But on the gold market, you can see, it moved down overnight, moved on back up. Maybe you're an evening trader, or maybe you got in right as the the gold pit started opening up and flew on up there. And over on the gold right here, we had to move expectation down to first. The first stop was 1703.5. And so that put tighten your stop if you're going short right here. Okay? So if you would have went short on gold last night, this would have been your first tighten your stop or take profit zone that you would have had. And you could have put that trade in the evening and woke up and, could have closed the trade out already. Maybe you would have chose a strike that was down there. And then on the move back up, let's say if you were calling the reversal, you saw it, leveling off and it started to move up, and with the market and all the other things that were coming out, or just your indicators told you to bounce off that, just whatever reason you chose to do the trade in the other direction here, how far should you expect it to go back up? Well, the first expectation, of course, is it goes back up to at least the close. And then further from there, where do we expect it to go from yesterday's close, which was actually a little bit lower. Let's see here. Grab that one, and it'll let me edit it. There we go. And we'll move that down to 1711 there, just depending upon exactly, I guess, how you're doing the charting. And then, so what's the move up from there? Well, the move up on gold, the next target move was all the way up to 1718. And I want to say that's to the dollar there, but I want to make sure I'm right. 1718.5. So it said, hey, if you're long gold, you need to be taking profit at 1718.5. Well, that would have been the perfect point to be taking profit or tightening your stops. As you can see, it turned right back around, fell right back to that level again. Stay right there, folks. We'll cover a couple more levels right before we wrap up the show.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so I was just checking out Apple there. He uses the exact same formula over there on that. And but going ahead and looking at corn. So let's check out the corn market. And on corn, we can see sort of, what happened. It's sort of not been a big day on corn at all. And so I just wanted to bring that up to sort of see, how it worked on that. It said it moved down to about 1736.25. And you can see we didn't quite hit it today. So 1736.25 been a very low volatility day. And that's about as low as we should expect corn to go. So about a point away from that. And as it got closer and closer, you'd be looking to tighten your stops. So corn was just a flat market. And that would be a market expectation that it'll come down to about this level before it closes out. Looking on over at a couple other markets, we can check out, let's see here, let's look at the Dow. So on the Dow, and we'll pull that up and see what levels we got going on right there. So on the Dow, we expected to move down to first 12,994. And let's see here, I'll get rid of that one. All right, so 12,994. Let's put that up. And that was our level again. That came in last night. So you can sort of see that actually the market dropped down to that, bounced off of it, came back down to it, hesitated a little bit, and then moved up, bounced back down to it, and moved on back up. So, and then this being yesterday's close. What about if you're trading the overnight session, you're trading late this evening? You expected it to go, you're still trading, you're looking for the short, how much further can it go? Well, the expectation based on the implied volatility. Okay, this is not backwards. This is not some historical formula. This is future expectation based on the implied volatility in the Dow futures options. We go down and we look. The next move down would have said take us to 12. First down to 1296. And so you can go on here, and then you just plot your level right on your chart. Pretty simple. There's pretty much any charting platform out there. You can use it. Pop through that level pretty hard. You can see it used it as a resistance and a support level for a while before it decided to move on back up. And then a full deviation move down. It said a full deviation on the Dow would have taken you all the way down to 12,926. And it didn't quite, and like I said, we don't always expect it to hit that full deviation, but 12,926 right there. So we got us within 10 ticks. So not far at all away from that. And so this would have been really helpful for you for picking that half deviation, that 0.7, that 1. You're seeing a lot of weakness right there. It starts to move on back up. So where do you expect it to move back up to? Well, it moves back up. It fills the gap, okay, overnight. Not a big surprise. And then when it falls back down, it moves back down to half a deviation. And so you can buy right there. You could have sold out. There's a lot of different things you could do. And then it starts moving on back up. Here's your profit. Price level expectation gets close. You could you could wait until it hits the exact tick. I usually don't wait for the exact tick. Okay, so usually plus or minus 4 or 5 ticks. Just depending on what a tick is. So like on the S&P, that'd be 4 ticks, so like a full point. On the Dow, maybe like 10 ticks. So I'm usually looking for basically between 4 to 10 ticks on each side, and so you can call that sort of a zone. I don't have to wait for the exact strike. But it's amazing how often it literally is right on that exact strike. Well, if you want to check that out, if you want to get a free 2-week trial to the diagnostic deviation levels, you want to check out the scanner, everything else, just go over to TFNN.com and click on Diagnostic Trading. Also over here on the left side, you'll see Diagnostic Box Spread Analyzer, and you'll get access to all of that, all in the exact same package. We have a couple different packages in there, but again, 2-week free trial, no risk to you. Check it out. And appreciate y'all for listening in. I know a lot of people have been asking about how to get access to this, and so we finally got it up and running. All right, let's go ahead and do a quick market wrap summary. We got the S&P almost flat on the day, just not even down a point, and actually down a point right now. We got the NASDAQ actually up 8 on the day, and we got the Russell, down 7 right now. We got the Dow down 15. We have copper and silver and gold are all flat on the day. We got corn just down 3 points, and soybeans down 3. And looking over at our oil is flat on the day, natural gas is flying, euro dollar is flat along with most of the FX pairs except for US yen and US Canadian. All right, everybody have a great day, a safe day. I'll see you here in a couple hours. I'm going to go into more detail and just help you really understand how to use these tools here. I'm going to be hosting for Ken Shreve.